Welcome back to Dinar Daily Channel, your dedicated source for tracking the developments surrounding the Iraqi dinar and other currencies that have captured the attention of global speculators. For decades, a certain possibility has animated countless discussions across investment circles: the long-awaited revaluation of the Iraqi dinar. Commonly referred to as the RV, this concept has been a constant source of debate, fueling vast amounts of speculation and driving meticulous financial projections for those who hold the currency and anticipate a major shift in its value. It's a financial narrative that has kept many focused on the potential for a significant turning point. The idea of the dinar's RV, once frequently overshadowed by doubt and dismissed by many established financial analysts, has always maintained a committed following. These dedicated supporters refuse to let the possibility fade, despite years of uncertainty and conflicting information. Now, in what is purportedly the year 2025, a dramatic shift in the narrative is being suggested. Reports reportedly originating from official redemption centers are circulating, implying that the theoretical event has finally become a reality. The hushed conversations that once took place in small investor communities are said to have culminated in a widespread, unmistakable declaration. The revaluation is reportedly live. This alleged historical moment is not confined to the fortunes of Iraqi dinar holders alone. Its reported impact is said to be simultaneously resonating through communities focused on other emerging market currencies, specifically the Vietnamese dong VND and the Zimbabwean dollar ZWL, which are often discussed in tandem with the dinar under the umbrella of a rumored global currency reset, are also reportedly experiencing a foundational change. What was once considered an extremely remote possibility is now claimed to be an unfolding reality, dramatically altering the financial landscape for personal portfolios and reshaping the global perception of these specific emerging market currencies. This claimed confirmation reportedly marks the transition from years of hopeful speculation into a verifiable financial reality. The alleged activity at these redemption centers, which have long been viewed as the critical link between holding a speculative currency and accessing tangible liquidity, is now being cited as validation for what some analysts have been suggesting for a while. The notion of the RV is now purportedly no longer just a theoretical exercise. It is claimed to be operational. Individuals who have positioned themselves within this market are reportedly observing screens displaying new exchange rates that significantly exceed the historically suppressed values that characterized the dinar, the dong, and the ZWL for years. These reported new valuations are described as providing access to liquidity, to financial credibility, and to profound opportunities for personal financial transformation for investors based in the United States. The significance of this alleged confirmation is amplified by the reported involvement of domestic banking systems. The information circulating suggests that these U.S. banks are now actively cooperating with the redemption centers to facilitate and process transactions in a secure and systematic manner. This reported domestic involvement is a key element that lends additional weight to the current claims, distinguishing this moment from previous cycles of rumor that ultimately failed to materialize. A clarity and institutional involvement being claimed are arguably the most significant factors in the current narrative. What sets this current moment apart from the numerous previous waves of rumors is the purported clarity of the signals. In years past, any claim of a revaluation was quickly overshadowed by official denials, frustrating delays, and a stream of conflicting reports that cast widespread doubt. This time, however, the reported indicators are said to be unambiguous. Allegedly, centers are actively processing transactions, banks are crediting accounts, and investors are reportedly starting to experience the financial shift in real time. This reported institutional action provides a level of verification that was consistently absent in prior cycles of speculation for those individuals who endured years of skepticism, faced criticism from traditional financial circles, and maintained a dedicated faith in this potential outcome. The current reports represent more than a simple revaluation. it is being framed as validation. The RV is reportedly no longer just a speculative dream confined to online forums. It is being described as a live, functioning event with verifiable, measurable outcomes. The Iraqi dinar has always been positioned as the central focus in the RV narrative, and the reports of live revaluation rates allegedly cement its role as the centerpiece of this claimed global financial shift. For decades, the dinar has been the subject of intense debate, oscillating between fervent hope and deep skepticism, with many dismissing the idea that it could ever return to the financial strength it possessed before the imposition of international sanctions. Yet the current reported developments challenge that prevailing skepticism. Iraq's economic fundamentals have reportedly grown significantly stronger over the last 10 years, supported by its immense oil exports, the re-establishment of international trade partnerships, and the systematic effort to move beyond the limitations of outdated sanctions that once restricted its financial capacity. Financial observers have frequently pointed to Iraq's quiet removal from the exotic currency classification as a profound signal of its readiness for full engagement in global trade, suggesting it was a necessary step toward the current alleged breakthrough. With leave rates now reportedly reaching the multi-dollar range per dinar, the immediate impact is described as transformative. Domestically, the reported revaluation is expected to significantly boost purchasing power, enhance consumer confidence, and lay the groundwork for major infrastructure expansion and renewed foreign investment. On the international stage, the reported financial shift is said to empower Iraq to function not as a nation recovering from conflict, but as a stabilizing financial force within the Middle East region. For investors, the dinar's reported re-entry onto major international forex platforms offers a level of liquidity and legitimacy that was previously unattainable. What was once considered a speculative paper currency is now purportedly an operational financial instrument, creating unprecedented opportunities for global stakeholders, including US-based holders, to potentially realize substantial returns after years of patient positioning, running parallel to the narrative of the Iraqi dinar, but with its own distinct economic story. The reported revaluation of the Vietnamese dong VND reflects Vietnam's remarkable economic ascent and the foundational structural changes that have prepared it for this moment. For years, the VND was often perceived as an undervalued and frequently overlooked currency, one that was acquired in large quantities at extremely low cost by speculative investors who maintained a hopeful, yet often doubtful, outlook on its potential to ever break out. Today, that enduring hope is claimed to have manifested into a tangible reality. Vietnam's trajectory as a manufacturing powerhouse has been nothing short of extraordinary. As global corporations have increasingly diversified their supply chains, shifting production away from China, Vietnam has firmly established itself as a critical hub for the production of electronics, textiles, and agricultural exports. This significant industrial strength, combined with Vietnam's anticipated upgrade to full market economy status by the World Trade Organization, has reportedly created the ideal conditions for the current confirmation. Redemption centers are now reportedly processing live VND transactions at dramatically elevated rates. This reported development is said to be transforming the dong from a fringe speculative asset into a globally recognized and respected currency. Financial experts are reportedly emphasizing that this revaluation is fundamentally sustainable, not merely a fleeting moment, because it is underpinned by verifiable structural economic growth rather than artificial hype or speculation. For investors in the United States, this alleged confirmation carries a unique level of excitement due to the dong's established accessibility. Unlike the dinar, which was historically more challenging to acquire in significant volume, many holders accumulated substantial amounts of VND at very low cost. Even modest reported revaluation numbers for the dong are claimed to translate into exponential gains for these portfolios, positioning the dong's breakthrough as one of the most lucrative outcomes of this new era of currency realignment. The Zimbabwean dollar, ZWL, a currency often recalled as the classic example of currency collapse due to extreme hyperinflation, has long been relegated to the status of a mere speculative token within the broader revaluation narrative. For decades, it was portrayed in headlines as unstable, utterly unreliable, and a seemingly laughable alternative to other stronger emerging market currencies. Yet, the current reported developments signal a remarkable shift that very few observers would have ever thought possible. With the reported announcement of a new asset-backed structure by Zimbabwe, ZWL is claimed to have acquired a legitimacy that is grounded in the nation's hard resources rather than in mere political promises. Unlike past monetary reforms in the country that relied primarily on redenominations without any genuine fundamental backing, the new framework is reportedly and explicitly tied to Zimbabwe's vast natural reserves, which include platinum, diamonds, lithium, and gold. This strategic move is said to be far more than symbolic. The nation's abundant mineral wealth provides measurable and tradable collateral that international markets can readily recognize and quantify. Analysts have noted that stabilizing a currency through a hard asset linkage typically leads to reduced volatility, which in turn can attract new and significant streams of foreign direct investment. While the ZWL's updated live exchange rate may not reflect the same dramatic multiple increases as those reported for the Iraqi Dinar IQD or the Vietnamese Dong VND, the proportional gains are still described as transformational. This is particularly true for individuals who acquired the notes years ago when they were trading at negligible value. For these holders, who are often retail investors that purchase the currency as a hedge against traditional markets or as a purely speculative flyer, the reported upside can represent a significant improvement in net worth. Beyond these individual gains, the broader macroeconomic implications are equally compelling. Zimbabwe's move reportedly strengthens its financial credibility within the Southern African Development Community (SADC), potentially establishing the region with another key player in shaping commodity-backed financial systems. The pivot toward gold-backed financial instruments is especially significant, as it reportedly situates Zimbabwe within a global trend, where certain nations are seeking to reduce their dependency on purely fiat-driven systems. By linking its currency with intrinsic value, Zimbabwe is not just stabilizing its domestic economy, but is also positioning itself as a potential testing ground for asset-backed monetary frameworks that other developing nations may soon consider emulating. The once dismissed ZWL is reportedly no longer a mere footnote in revaluation conversations, but is now emerging as a viable tool for portfolio diversification. The international financial community is reportedly responding to Zimbabwe's latest currency development with a complex mixture of optimism, caution, and strategic foresight. Dr. Michael Harrington, an economist specializing in emerging markets and monetary reform, is cited as characterizing the live RV as a monumental recalibration of undervalued currencies that have been historically ignored by global financial systems. His reported statement underscores the idea that for years, Zimbabwe's immense economic potential has been obscured by political instability and poor fiscal management, rather than by a genuine assessment of its substantial resource-based strengths. By reportedly shifting to a gold and commodity-backed system, Zimbabwe is effectively forcing the global financial stage to reassess its intrinsic role. However, Harrington also reportedly stresses that this recalibration is only the necessary first step, and that the crucial maintenance of transparency and fiscal discipline will ultimately determine whether the revaluation leads to lasting prosperity or merely another short-lived rebound. Currency strategist Linda Morales reportedly echoes this delicate balance of excitement and prudence in her own commentary. While Morales acknowledges that investors are rightly thrilled by the reported returns, she reportedly warns that the sudden expansion of wealth often brings with it hidden risks. These risks can include significant tax liabilities, the dangers of portfolio mismanagement, and an increased exposure to opportunistic financial scams that tend to surface prominently during major financial shifts. She reportedly emphasizes that true wealth is not solely about the numbers displayed on a screen, It introduces significant responsibilities in terms of meticulous planning, careful stewardship, and compliance with all regulations. Meanwhile, banking consultant Richard Caldwell reportedly highlights the institutional significance of the redemption centers, which he identifies as the frontline validators of this profound financial transformation. For years, detractors dismissed the Dinar RV as pure rumor or simple internet-driven speculation. The fact that redemption centers are now reportedly confirming and displaying live numbers allegedly settles one of the most persistent debates surrounding the ZWL. Caldwell reportedly argues that this institutional validation is set to reshape global investor psychology. He suggests that confidence is no longer rooted in abstract speculation, but is now based on documented transactions. Taken together, these expert perspectives are claimed to build a strong case that the current event is not another cycle of rumors destined to collapse, but rather a potential turning point that is supported by genuine structural reforms, hard data, and verifiable market mechanisms. In essence, Zimbabwe's reported revaluation of the ZUB knows less about chasing quick profits and more about fundamentally rewriting the rules for how emerging markets can effectively leverage resource wealth to transform both their domestic economies and global investor portfolios. Looking ahead into the medium to long term, the trajectory of the Iraqi Dinar (IQD) is increasingly being defined not just by initial speculation, but by verifiable structural reforms occurring within Iraq's financial and economic ecosystem. Over the past decade, Iraq has been engaged in a complex and ambitious program of infrastructural rebuilding, with the dual aim of stabilizing its political environment while simultaneously investing in crucial modernization projects that extend far beyond the oil sector. These initiatives reportedly include comprehensive banking digitization, necessary regulatory upgrades, and compliance with international standards. They also involve enhanced security protocols designed to reduce financial crime and prevent capital flight. Economists reportedly highlight that these measures are not merely cosmetic. They are absolutely essential for the successful integration of Iraq into the global forex markets, where transparency and reliability are the non-negotiable prerequisites for credibility. Analysts are now reportedly projecting a potential consolidation of the IQD within the $5 to $7 range over the next 5 years, a target that is contingent on the continuation of current policy discipline. This is not an arbitrary target. The projection is said to reflect the powerful combination of Iraq's vast oil reserves, which are among the largest globally, with increasing governmental commitments to diversify its economy through advancements in agriculture, renewable energy, and nascent technology initiatives. By actively encouraging partnerships with American, European, and Asian companies, Iraq is intentionally weaving itself into global supply chains. This strategic integration, in turn, is designed to support sustained demand for a stronger, more stable national currency for U.S.-based investors. The long-term implications are significant, as American banks reportedly continue to expand their capacity to handle IQD transactions on mainstream forex trading desks. The overall liquidity opportunities are expected to multiply, effectively reducing friction for both buyers and sellers. This suggests that the current revaluation event is not an endpoint but should be viewed as a powerful launchpad, setting the currency on a course toward full global financial reintegration. The current reported live rate is not presented as the culmination of the IQD's journey. Instead, it is being framed as a vital stepping stone toward a sustained upward trajectory that is firmly grounded in the nation's resource wealth, diversified economic growth, and an increasing institutional maturity. The Vietnamese dong, VND, stands out as another currency that is positioned for strong and sustainable appreciation in the coming years. Its future is deeply intertwined with Vietnam's carefully cultivated and expanding role in global trade. Unlike some emerging economies that rely heavily on a single resource, Vietnam has intentionally built a multifaceted growth model. This model is firmly based on its booming manufacturing sector, technology adoption, and increasing integration into both Western and Asian markets. This dual alignment, which successfully balances relationships with major players like the United States, Japan, and the European Union on one side, and China and ASEAN partners on the other, is said to ensure economic resilience even amidst global geopolitical shifts. Analysts project that Vietnam's new exchange rate will not simply plateau, but is expected to gradually appreciate as the country continues to attract significant foreign direct investment into its industrial zones, ports, and technology hubs. Already, global corporations, particularly US-based tech and manufacturing giants, are reported to be expanding their operations in Vietnam to diversify their supply chains away from China, further solidifying the nation's reputation as a cornerstone of the global manufacturing ecosystem. For investors, this dynamic is claimed to offer long-term profitability, especially for those who wisely choose to maintain a portion of their converted wealth in VND-denominated assets. These assets are expected to appreciate steadily in correlation with Vietnam's continued GDP growth, the Vietnamese government's ongoing reforms, and financial regulation and banking modernization are also cited as further strengthening investor confidence, as these measures reduce systemic risk and significantly improve investor protection. With its rising exports, an expanding middle-class consumption base, and a growing national emphasis on renewable energy development, Vietnam's macroeconomic fundamentals align strongly with the potential for sustained currency stability. In short, the VND story is being presented as not just about speculative upside, but about sustained momentum, making it a credible asset for portfolio diversification in an increasingly volatile global market. The outlook for the Zimbabwean dollar (ZWL) remains a fascinating blend of optimism, deep skepticism, and cautious anticipation, as the nation attempts to pivot from a history defined by hyperinflation toward one marked by asset-backed credibility. Central to these long-term projections is Zimbabwe's vast and untapped mineral wealth, which includes gold, platinum, lithium, and diamonds, all commodities with strong and continually growing global demand. By anchoring its currency to gold and related resources, Zimbabwe is attempting to follow a financial model that ties value directly to tangible assets rather than to volatile fiscal policy. Analysts suggest that if this framework is successfully and transparently implemented, it could not only stabilize the ZWL but also potentially position it as a regional reserve currency within Southern Africa, particularly in commodity-linked trade agreements. However, long-term success is fundamentally dependent on governance, specifically whether the government can maintain strict fiscal discipline, ensure transparency, and foster consistent cooperation with international oversight bodies. Critics rightly point out that Zimbabwe's long history of political mismanagement cannot be ignored, making genuine trust building a critical and necessary step for attracting and retaining foreign investment. Nevertheless, a degree of optimism is reportedly warranted. For US-based investors, the ZWL may eventually offer an unconventional hedge against fiat volatility, particularly during periods when the US dollar faces inflationary pressures or when global markets actively seek reliable commodity-backed alternatives. Structured payouts held in ZWL-denominated accounts could serve as a unique portfolio diversifier, effectively reducing overall exposure to traditional equities and bonds. While caution is undeniably necessary, the trajectory is presented as undeniably brighter than it has been in the past 2 decades. The ZWL, which was once largely written off as a hyperinflated relic, is reportedly transforming, slowly but surely, into a crucial test case for how emerging markets can strategically leverage their mineral wealth to engineer currency legitimacy and invite global financial participation. As US-based investors begin to face the realities of liquidity events tied to these reevaluations, comprehensive preparation becomes not just advisable, but absolutely essential for long-term financial security. Financial planners are reportedly urging their clients to actively avoid the immediate temptation of large, lump-sum cash-outs. Such rapid liquidity events can often lead to financial mismanagement, impulsive spending, or an aggressive and unnecessary exposure to elevated tax liabilities. Instead, they recommend utilizing structured payouts that span over many months or even years, which allow for significantly better risk management, income smoothing, and sustainable wealth preservation. The often underestimated tax implications that accompany the excitement of revaluation events demand immediate consultation with qualified tax advisors. The specifics of capital gains, income classification, and reporting requirements will vary dramatically. These requirements depend on each investor's individual jurisdiction and the chosen payout structure, making professional guidance truly indispensable. Redemption centers are reinforcing this critical message, reportedly requiring strict documentation protocols, such as proof of purchase, valid government-issued identification, and meticulous adherence to anti-money laundering (AML) regulations. These stringent safeguards are specifically designed not only to protect the investors themselves, but also to reassure regulators and financial institutions that the entire process is transparent, secure, and fully compliant beyond the complex logistics. The emotional and psychological component of experiencing sudden wealth cannot be overstated. Experts are emphasizing the paramount importance of patience and strategic decision-making, constantly reminding investors that the building of generational wealth is achieved through careful stewardship, not through overnight expenditure. This necessitates prioritizing the reduction of any existing debt, implementing strategic asset diversification, and establishing protective financial vehicles, such as trusts or appropriate insurance instruments. Investors who approach this new phase with financial discipline and the counsel of trusted professionals are far more likely to successfully transform these revaluation windfalls into enduring financial legacies. The overarching message remains clear: the reported RV event is not merely about achieving immediate gains, but about building a solid foundation for sustainable wealth that is intended to benefit not only the individuals involved, but also their families and communities for many decades to come. The year 2025 is expected to be permanently etched into financial history as the pivotal moment when speculation finally gave way to concrete confirmation. It is the year when hopeful anticipation reportedly transformed into a tangible, measurable reality. For years, discussions surrounding a potential global currency revaluation (RV) were often dismissed as fringe theories, internet rumors, or merely the dreams of overly optimistic investors. Yet today, the redemption centers are reportedly no longer operating in hushed tones of uncertainty. They're said to be speaking with undeniable clarity and conviction. The RV is allegedly live, and the long period of waiting is over. This dramatic shift from quiet whispers to unambiguous declarations signifies far more than a simple currency adjustment. It represents the culmination of years of deep patience, unwavering resilience, and steadfast faith in a financial possibility that many believed would never actually materialize. For the holders of the Iraqi Dinar (IQD), the Vietnamese Dong (VND), and the Zimbabwean Dollar (ZWL), this is not just a major financial event, but a profound validation of their belief, their strategy, and their endurance. The numbers now reportedly displayed on live screens across redemption centers worldwide confirm that what was once speculative chatter has become a verifiable economic reality. As personal accounts reportedly swell and once distant dreams begin to take tangible shape, the claimed RV of 2025 is emerging not only as a significant economic milestone, but as a generational turning point in the global distribution of wealth. Families who diligently held on to these currencies as a hedge against uncertainty now reportedly find themselves at the center of a historic transfer of value, one that profoundly challenges old financial paradigms and simultaneously opens new doors to unprecedented possibilities. For U.S.-based investors, the message could not be clearer. The long-awaited window of opportunity has allegedly opened, and with it comes both unprecedented financial opportunity and a newfound level of responsibility. The future is no longer a distant or abstract promise. It is here, it is reportedly live, and it demands discipline, stewardship, and careful management. This discipline is essential to ensure that this profound moment becomes not just a fleeting windfall, but a solid foundation for lasting and sustained prosperity. The information circulating is purely for informational and educational purposes. It should never be construed as financial advice, specific investment recommendations, or legal or tax counsel. The views, projections, and analyses presented are based on publicly available information, expert commentary, and speculative scenarios related to global currency developments. Currency markets, especially those involving the Iraqi dinar, Vietnamese dong, and Zimbabwean dollar, are inherently volatile and subject to significant political, regulatory, and economic risks, and past patterns do not guarantee future results. Readers are strongly encouraged to conduct their own independent research and thorough due diligence before making any financial commitments. Consulting with licensed financial advisors, certified tax professionals, and legal experts is absolutely essential to ensure compliance with all applicable laws and to develop strategies that are perfectly suited to individual financial circumstances. The sources of this information make no warranties as to the accuracy or completeness of the information and disclaim all liability for any losses or damages arising from reliance on this material. By engaging with this type of content, the reader must acknowledge full responsibility for any financial decisions taken and must understand that all investments inherently carry risks, including the potential loss of principal. This message is intended to inform the public about the circulating claims regarding a currency revaluation event, focusing strictly on the reported activity and potential economic context without offering any form of direct investment endorsement or financial opinion. The circulating reports consistently emphasize the transformation of these currencies from speculative instruments into instruments of potential liquidity, backed by alleged structural changes in their respective economies. This transformation is presented as a validation for the commitment and belief of long-term holders. The focus is placed on the reported movement in redemption centers and the alleged cooperation of banking systems, which are key elements distinguishing this event from past rumors. Ultimately, the script aims to convey the gravity of the claimed development that the years of waiting and speculation are allegedly over while maintaining a purely factual and neutral reportage on the claims being made within the currency investor community.